Welcome to Money Management Channel. In the Beyond the Headlines videos, I will talk about mega cap and large blue chip companies, their business strategies and their stock performance. My goal is to provide you insights and help you learn more about these popular stocks so you can enhance your investment strategy and achieve your financial goals. In this video, I will talk about 3 important things that you should pay attention to in the coming months if you are interested in Apple as an investor. Back in late April, Apple reported their fiscal second quarter results that came in ahead of the general financial analysts' consensus estimate. While the demand for Apple's iPhone 13 and MacBook Pro drove record sales in the quarter, Apple's management expects June quarter sales will be $4 billion to $8 billion lower than usual due to supply constraints, COVID-19 related disruption, and a pause in sales in Russia. Over the next few months, there are 3 important things that you should pay attention to on Apple. You most likely will not hear these important tips from mass media and news headlines, so I hope you will enjoy this video. First of all, the number one thing to watch out for is the macroeconomic situation and the $4 billion to $8 billion headwind in the coming quarter. Apple's management believes that their June quarter year-over-year revenue performance will be impacted by a number of factors. Supply constraints caused by COVID-related disruptions. Industry-wide silicon shortages. COVID-related disruptions, especially those impacting the customer demand in Asian markets. One thing to note is that some of the revenue sales impacted by the supply chain disruption may be gone forever. While some sales can be considered as deferred out to later time, some other demand would be essentially destroyed as there will be new product cycles coming out later in the year where consumers buy alternative brands when they cannot wait for the Apple stock to replenish. One of the driving factors is the COVID lockdown in key Chinese cities that impact the supply chain. So if there is further extensive lockdown in key Chinese cities, it could further negatively impact Apple's business in coming months. The good news is that the demand for Apple's product is solid, and I would expect it to continue in coming months even with high inflation. For example, iPhone 13 family is having a really strong year. When we look at top-selling smartphones around the world, Apple dominated during the March quarter. According to Apple's management, the top 6 models in the United States are iPhones. The top 4 in Japan and 5 of the top 6 in urban China are from Apple. So the key wildcard is on the supply side. The second interesting area to focus on is Apple's service business, which includes App Store, music, cloud services and AppleCare, video, advertising and payment services. This could be a major driving force in coming quarters if Apple does it well. In the March quarter, services business set an all-time record on the strength of subscription growth over the past year. One of Apple's core competencies is their ability to seamlessly integrate their hardware, software and services together to deliver exceptional user experience. Apple services revenue rose to $19.8 billion in the March quarter, reflecting a 17% increase from a year ago, and accounted about 20% of the total Apple sales. The run rate of almost $20 billion is essentially double what we had just 4 years ago. By the way, Apple even won their first Academy Award for Best Picture with Coda, making Apple TV Plus the first streaming service to win in this category. There are a few nuances we should focus on when we think of Apple's services business. First, more and more of Apple's services business comes from subscriptions. The company counted 825 million subscriptions across its own services and through the App Store as of the end of the second quarter. That's up 165 million from 12 months ago. Those subscriptions create consistent revenue month after month, quarter after quarter, providing a stabilizing force for Apple's revenue and profits. Second, how much more growth is there in the services business? Back in January 2022, during an earnings call with investors, Apple CEO Tim Cook revealed that Apple now has 1.8 billion active devices. I would be very interested to see how much more the subscription per active device ratio can grow in future months. Can the 40%, which is 825 million subscriptions divided by 1.8 billion active devices, be further pushed up? I think so, and I bet Apple's management team is working hard on delivering more new services to attract new services users and to get their loyal base to purchase more service subscriptions. The services growth rate for the coming June quarter would likely be less than what we saw in the March quarter, but overall, services business is something that we should watch for. Third, the profit margin on Apple's service business is amazing. Services gross margin is north of 70% versus products gross margin was sub 40%. So the more services that Apple can sell, the better the total profit margin will be for Apple. So we covered the supply constraint headwind and the service business opportunities. The third important item that you should pay attention to in the coming months as an investor is Apple's stock buyback strategy. One of Apple's key investors is Warren Buffett's Berkshire. The Oracle of Omaha had praised Apple's stock buyback strategy, which gives Berkshire an increased ownership of each dollar of Apple's earnings without the conglomerate having to lift a finger. In 2021, Apple spent over $80 billion on buybacks. They spent more than $467 billion in the past 10 years. Investors are beginning to see Apple as a flight to safety or quality trade thanks to the combination of its large cash flow and willingness to return that money to investors. With the significant amount of cash on hand, Apple can use the fund to maneuver potential bumps of their stock performance by further leaning on stock repurchasing and dividend payout. In addition to these three important points, Apple's new product pipeline such as AR glasses, AppleCare, healthcare could continue to provide growth drivers for the company and the stock performance. On the flip side, any disruption on the product launches, longer than expected hardware replacement cycles and hiccups in the services business will produce headwinds for Apple's near-term growth. More importantly, any drastic sentiment change from investors on Apple's expected P/E ratio will have a direct impact on the stock market performance. Before the pandemic, Apple's P/E ratio had been usually under 20. In May 2022, with the stock price at around $150. Apple's trailing 12-month P/E is over 24, which is still considered expensive. So there you have it. I hope you like this video. What is your view on Apple's stock performance? Share your points of view in the comment section. To stay up to date with my latest videos and cool money management tips, make sure to subscribe to this YouTube channel by clicking the subscribe button if you haven't already done so. Until next time, stay safe, happy money management, thank you.